Hi guys, Sandy Ingram here. Welcome. Let's discuss currencies, particularly those that are expected to perform well against the US dollar in the coming weeks and months. And of course, the IQD and VND. This is a longer than usual video because the US dollar is doing strange things. We will discuss the VND and IQD first and then venture into the additional currencies. Let's begin.
The IQD trades within a tightly controlled band set by Iraq's central bank, resulting in minimal fluctuations. Short-term forecasts for USD to IQD suggest virtually no change, expecting a move from IQD 1,309 to about 1,308 to 1,309 over the next month, which is like a roughly minus 0.01% shift. Quarterly outlooks are a bit more bullish. Models project a dip to IQD 1,307 to 1,308 by year end, yielding a modest 0.6% gain for IQD holders. Even 1 year ahead, some forecasts anticipate USD to IQD sliding to around 1,307, indicating about a 0.1% appreciation. This information comes from Coin Codex, and honestly, it's the same information currency day traders are receiving. In short, the IQD could modestly strengthen, but expect only marginal moves, under 1%. Because it's pegged and tightly managed, it's unlikely to appreciate substantially without policy changes, or an out-and-out revalue. Now for the Vietnamese Dong, or VND. Forecasts paint a more dynamic outlook for the VND. Short-term models see the USD to VND slipping by about 0.7 to 0.9%, from around 26,140 this week to about 25,900 to 26,000, meaning broader VND appreciation. Medium-term forecasts through the third quarter of 2025 from MUFG and UOB indicate USD to VND could rise to 26,300, which means a weaker dong, then strengthen back to 26,100 to 25,900 in the fourth quarter of 2025 and early 2026. Over 2025, VND's estimated annual range is 25,900 to 26,400 per USD, with average value suggesting about a 13% annual move, though this figure really reflects volatility rather than straight appreciation. In other words, parts of the year may offer tightening, or USD weakening, especially in the back half. So, the bottom line is the Iraqi Dinar really only offers incremental gain potential. It's likely to appreciate by less than 1% within 6 to 12 months, mostly because of its centrally managed rate. As an IQD investor, know that this report is for international investors who day, week, and month trade. We are in this for the long term and are not bothered by the trends. On the other hand, the Vietnamese Dong is showing modest near-term strength, with the USD to VND hovering around 25,900 to 26,000. Plus, there's potential for more volatility later in the year. For those of you tracking exotic currencies, you might find that the upside in the Iraqi Dinar is pretty limited. Meanwhile, the Dong presents clearer and honestly, more actionable opportunities, especially if Vietnam manages to steer tariff or trade wins in its favor. The US dollar is starting to show some signs of weakness, and a lot of investors believe this trend could keep going in the months ahead. Actually, the dollar has already dropped about 10% in 2025. Its worst half-year performance since the US moved to a floating exchange rate. Major fund managers are now holding record short positions against the dollar, while really ramping up their exposure to the euro. And political uncertainty in the United States, including talk about possibly removing Federal Reserve Chair Jerome Powell, has just added more fuel to the fire. These developments are pushing global investors to consider other currencies that may rise in value against the dollar. One of the top contenders for appreciation is the euro. Global sentiment is overwhelmingly bullish, with investors holding the highest euro positions in over 20 years. Analysts from institutions like Standard Chartered and Goldman Sachs expect the euro to continue climbing, possibly reaching 1.18 to 1.20 against the dollar by early 2026. Another strong currency to watch is the British pound. Despite some caution from BNP Paribas about current overexposure to UK assets, the pound has rallied significantly in early 2025, making it a strong candidate for further gains if momentum continues. The Japanese yen is also worth watching. Known as a safe haven currency, the yen tends to strengthen during times of global uncertainty. With ongoing market jitters and a weakening dollar, the yen could see the USD JPY rate fall from around 144 to as low as 138. FX option markets are increasingly positioning for this possibility. Meanwhile, the Canadian dollar, or loonie, is rebounding after a weaker period. It has already gained about 5% this year, and BNP Paribas projects further gains, with the USD CAD rate potentially dropping toward 1.40 within the next 3 to 12 months. Another interesting pick is the Norwegian krone. Norway's strong fiscal position and favorable interest rate differentials are likely to support krone's strength in the months ahead. For those looking into emerging markets and commodity-linked currencies, the Mexican peso continues to be a solid performer when the dollar weakens. Though political changes in Mexico might cap gains, the peso could still appreciate beyond the 20.3 to 21.3 range. Likewise, the Australian and New Zealand dollars are showing potential for incremental gains, supported by commodity price rebounds and improving global trade flows. What's driving these shifts? First, markets are pricing in up to 75 basis points in U.S. Federal Reserve rate cuts by year-end. Meanwhile, other countries are holding steady, making their currencies relatively more attractive. Second, there's a slow but steady trend of global de-dollarization. BRICS nations and other governments are exploring alternatives to the U.S. dollar, reducing demand for the greenback over the long term. Third, investors are reallocating capital toward Europe and Asia, where equity markets are now outperforming U.S. stocks. Lastly, global trade tensions and changes in monetary policy are encouraging a broader diversification away from the dollar. For international travelers, digital nomads, and investors, this is a good time to rethink your currency exposure. Holding or investing in euros, pounds, yen, krone, or even commodity currencies like the Aussie dollar may help protect your assets or even produce gains. Investors might also consider buying foreign bonds or stocks to benefit from currency appreciation. And for currency traders, the most active pairs, like EUR USD, GBP USD, USD JPY, and USD CAD, are full of opportunity in this environment. In short, the dollar's dominance is being challenged from multiple fronts. While it's still the world's primary reserve currency, the combination of political instability, expected interest rate cuts, and shifting global sentiment has created a rare opportunity. The euro, pound, yen, krone, and Canadian dollar all appear poised to rise against the dollar in the months ahead. Emerging market currencies like the Mexican peso and commodity-driven units like the Australian and New Zealand dollars could also perform well. If these trends continue, we could be witnessing the early stages of a global currency realignment.